So the first thing ever when it comes to the market is usually to start with the weekly charts. So especially during the month or during the week. Now, currently, this week closed this way. Why? Because technically we had a rejection of this weekly gap level. And after that gap level, this is what we have now. We have this classical scenario right there. So we have this low, the rejection low, and then we have this high. So, so you have to mark the SNR levels on the weekly and then the liquidity levels on the weekly. So what we want to do when we drop down from here, from the weekly to the daily, is we want to refine these levels, okay? So we want to be able to refine these levels. So for some refinements, one of the things you'll notice is that what we have is actually from here to here. Okay? The reaction on the weekly, this is what it looks like on the daily. And if we consider this guy, this level, this guy, you see this guy have some MSUs underlying MSUs. So what we are going to do is we are going to say, oh, this is the last low for the main low. Okay? So it's only a bit to refine this weekly level. So the moment this weekly level is refined, I can comfortably delete this because I've been able to refine this weekly level to this. Okay, so now on the daily, what can I see? What else can I see? Okay, now I can see this HNS level, the daily HNS. And from this HNS, I can comfortably also delete this weekly level. Okay. What we want to do, or delete this also, what we want to do is to keep our chart as clean as possible. So when we have our refinements, we want to delete what has been refined and keep the refined levels instead. So on the daily, again, the highs, so we have this high targeted the closest SNR to the daily current market price. We have this broken gap level, so I'm going to mark this broken gap. Anywhere else, this HNS is closer than any of this. I don't want to start marking this. That might make my chart look a bit rough. So now to the H4. Now on the H4, there's quite a number of detail to take note of. But one, our level is now taking shape. So the level we refined, that's where we are currently. And we also have this engulfing, this bullish engulfing right there, sitting pretty right there. And we are just going to be repeating the same thing. The only thing we've done is to refine all of these levels. So remember, this guy was drawn from the daily. It was the daily level. So I can comfortably delete this guy now. But I must never forget that I have a daily level inside this engulfing. Okay. So on H1, or classically on H4, these are all of our levels. So the chart is still looking very clean, which is paramount priority to me right now. The chart is looking clean. We have our liquidity last side for the main. We have our weekly refined area. This is a daily area, which H4 engulfing. We also have a daily HMS right. So on H1, I want to be able to refine our zones. So sorry, I noticed I didn't draw this to the week. Okay, so on H1, I want to be able to refine our zones. So one of the things we want to note is that this engulfing, this one and this one, we can mark this as the refinement because this engulfing is outside of this zone. Okay? The engulfing is outside of this one. The only thing we can do right now is to mark this breakout SNR. This breakout SNR as well we expect price to react from. But the engulfing we can mark as a refinement of the H4 engulfing is the one lower. Okay? So this engulfing, because it is still within the zone. So we have this engulfing within the zone. This is out of the zone already. So almost often than not, price may not actually react to it. But however, we have this breakout SNR. As you can see, there's two-time breakout here in the H1. The price broke, first breakout, second breakout. So yeah, so classically we are currently here on the H1, and as you can see, there's BPE right here. There's BPE. Why is there BPE right here? It's very, very easy because when you look at the open close or open high and close of the levels, you clearly see a BPE. Now, this is an example of what we have here. Okay, so we have this. So within these schematics, if we look at the open and low and close, clearly for a bullish candle will open at a lower price and close at a much higher price. Okay. So why a bearish candle will open high and close as a more lower price. So what we want to do is to look at the OHLC of this candle. So open right there, go to the low, comes to the high, and then closes here. And then this next candle opens, then goes to the low, and then closes here. So in this scenario, exactly, so we have two-time breakout. So we have first breakout, and then we have second breakout. Okay. So I'm trying to explain what we have here. So in this scenario, in a scenario we have something like this. Okay. See, we have this is bullish. Then we have this. Then we have something like this. And there's a difference between what we have here and what we have here. Basically, what we have here is we have opened the candle, came to the low, came to the high of that candle, then we closed again. Now we have opened the bearish candle, the high, the low, and then a retracement. So compared to what we have here, this move has a retracement. So this is a B, this is a BP, right? This so from BPE setup, we have two-time breakouts, we have pullback, and then we have entry. In this scenario, we have two-time breakouts. First breakout, internal, external, and then we have internal, external with a pullback. So for us to get entry, that means you can enter at this point and then get a bearish just right there. So that explains BP, which is exactly what we got at this level. So at this level, okay, sorry. So yeah, so that's BP classified. So at this level, that's exactly what we have here. So what I can do here, because we just took liquidity above this I, classical I, this is a sell zone. Can I remember it was a refined sell zone from the weekly level? Just tap into it. And on M15, just want to watch what's going on. So currently, on M15, I can see an MSU, right? This price taking the high and then took the low right here. So this looks like a true breakout structure. And this is a return leg into this level. And if I decide to play around to pick the buy, to pick the sell, I can use type 1 trend line just right there. So if I pick it from here to check type 1 trend line, as you can see, there's decent rejection, very decent rejection. If I decide to watch that trend line on M5. So the same thing happens if I'm going to then pick my targets. This is my next zone, right? This is the next zone I'm looking at. So it makes sense to mark the liquidity just closer to the zone. So this can be my first target, for example. Okay. And another thing we want to do is within this big zone, because we could not refine um, the daily level, or we could not refine the H4 level. Remember, the H4 is a very big zone, right? This is the big H4. This is the big H4 zone. And then this is H1 refinement, okay? But within that H1 refinement, as you can see, there's an hidden engulf in here. So I'm just going to mark it. And that's what's on M15 is much more clearer. So on M15, this is the hidden engulfing, this guy here. So inside the H1 hidden engulfing, we have M15 hidden engulfing. So I'm just going to mark that to make things easier. Okay. So it means that I can take this line off to keep my chart super clean. I can also take this breakout line off. Okay. So now if I play, so our expectations are set, we're expecting sales and sales back into the liquidity that is into the zone. Another thing I want you to note about this zone is this is an MSU zone, which you can see price took the high there, took the low, and then broke out. So this is your true breakout. This level within engulfing, this guy can still serve as liquidity in the next set of days when price eventually come into the zone. So a lot of these things are also helped by the fact that I knew what happened during the week. Okay, so crazy drop right there. The price comes into the level, as you can see, reduce that liquidity. What else do we expect? Oh, now we tap into our level. Now the question is there a reason to engage this buy? Okay, for me, yes, there's a solid reason to engage the buy immediately. And the reason for that engagement, as you can see two-time breakout, first breakout, second breakout, and that's BPE. Again, this is a bullish engulfing. So if we decide to engage that buy over there, one of the things we want to do is to put our stop in a very, very safe location. And the next question is if that's going to be where the buy is going to be from, where's the most reasonable place to put your target? Because like I used to say, in trading, our entry is as important as our targets. We can't take entries without even talking about targets. And if we don't talk about targets, we'll be making a lot of mistakes, okay? So price taps the level classically, and then as you can see, pretty decent rejection of that level. So what I want to do is again check H1 to validate what has happened or what is currently happening. Okay. So within this zone, we still have this classic scenario. We don't know if price is going to go ahead to tap it, but what we know is we have M15 to 10 breakouts, and then we have rejection of. But the idea is that because this is not properly mitigated, if I enter a buy here, I'm supposed to put my stop below this hidden engulfing. Okay. And like I said, the targets. So again, H1, H4 would be the best area of interest for targets. So for targets, decently, you can target this gap level right there. Target the gap level right there. And the reason is because there is an MSU for sales here. And price can still come back to use that MSU for continuation. Okay. So let me show you. So MSU, as you can see, so price took the low right there, took the high, and then broke. Again, took the low here, took the high, through break of structure. So price can still come anywhere within this zone. Again, this is also an MSU, took the low, took the high, and then broke. So we have a range of MSUs within that level. So let me put the target as first MSU. So that's also a possibility. And another thing we can use for entry, if you consider your type 1 trend line, right there, that can also be a confluence for entry. So what you want to do is you don't want price to close below the trend line. When price goes below the trend line, you want to try to cut your losses as soon as possible. Okay, so we have two-time breakout on M15. However, we still have on mitigation around this level, like I said. So yeah, that's clear. So the idea is to always follow the story of price. You want to see, oh, what's price doing? What are the things you want to consider? What's the reason for this trade? Any more reasons for this trade? What else can be done? What else do you want to actually consider? As you can see in this scenario, the price gave a price behavior. This is actually a very decent one. So there was price behavior. See price comes, takes the high, and then comes to induce the low. So in this, if I was in this trade, or if I was to pick this trade live, after this inducement, I'm going to go to M1 and then look for reasons to actually pick the trade. So in M1, you can see efficient pricing. This is not efficient, this is efficient, this is efficient. So I'm going to pick the buy from somewhere around there, my stop just below this level of efficient pricing, because that is something that you expect after price behavior. Okay, so price behave that certain way into that area. And again, like I said, our target is going to be this MSU zone because we believe that with an MSU that strong or that powerful, there could be reasons for price to actually move to the downside. At least within this area, there are three MSUs. Okay, so back to each one charts. Okay, nice. Just keep watching. Okay, so price pierce through the MSUs, descent move. And then immediately what happens next is we get the breakouts. There's an H1 breakout. So again, I'm back to M15. So in the M15, I'm looking for just the exact same thing. So what happens in this scenario is for a level like this, where you're expecting sales, see price rejected a little bit and then broke. If price should break this level, we should have a breakout in this level. This zone that I just drew becomes our continuation zone for sales to the downside. Help. Okay, so this zone becomes a zone for sell, continuation to the downside. So what happens next is we expect price to reject, tap, and then start to sell. Another reason is this is an MSU. Okay. Price takes the low, takes the high. This is an MSU, so we can mark the classic SNR for entry and expect price to actually tap into it. So yeah, still on M15. And what will be our targets? Yeah, one of the decent targets is all these all mitigations that we have below. But first of all, we can have a fresh target here because this is a breakout SNR. Okay, this breakout SNR is also a gap level. So price can come this portion first. And again, this is our weekly refined zone. So from that portion, if I use the play button, you can see we had breakouts from that level. Okay. For steps, that level. In this scenario, it's almost always good to see how this is actually playing out because as you can see on M5, there's some sort of like behavior. So the high take the low, but it's too far to actually determine what's going to go on. So on M1, because this is New York and New York moves so crazily fast. One of the things you will notice on M1 is that there's also price behavior here. So price takes the high, right? Takes the low. Okay, this is a second inducement. So we'd assume that this is our true breakout structure. Okay. And internally, there's also an MSU for sales here. Take the high, take the low. So again, this is a true breakout structure. So on these retracements, you can comfortably pick this buy off of this breakout. And one of the things you would notice is that that breakout or that MSU coincide with or happened after an M5 breakout. As you can see, that's an M5 breakout right there. So you can comfortably pick your trade after that breakout. Your stop will be below the engulfing. So let's say this is your entry. Your stop is below this level. This guy is the MSU on the M1. And like I said, this will be our first target because this is where we expect price to actually come into. Why? Thousands of reasons. Okay, let's see this. One of the things you'll notice at this point is that this is inefficient. Okay, this guy is inefficient, right? Price left with this guy was not efficient, so we expect price to come back into this area to actually gain efficiency. And for all we know, one of the things we can look out for is sell continuations from that side. Okay, so sell continuations from that side, and also on H1, I can remember there was also a trend line confluence. I think something from here. Oh, I'm not quite sure. Not on this broker, I think it was on Saxo. Okay. There's an engulfing here. So with this engulfing, there was trend line confluence of Saxo. So price stopped, rejected, and just like we did earlier, how we find our weekly zone. You can see this is where the MSU is. This is the last high before the main high. The price again comes into this level, where again you can comfortably start to look for sales in that region. Okay, so from what we saw on the M1, let's just get to the M15 to that effect. As you can see, M15 taps, M15 rejected. Okay, M15 tapped and rejected. So one of the things we want to do again, look out for what really happened within that zone. So again, like I said, price induced this liquidity and then start to drop. Any other confluence? Yes, we currently had reasons to look for sell within that area. And then we have trend line confluence, a lot of trend lines here, depending on what you're looking for. Several trend lines to that effect. So price stops and then the drop happened. And like I said, this is our refined H1 zone from this H1 engulfing. Another thing we want to look out for also is this engulfing. Truth is, this engulfing is a decent engulfing. With an M15, then engulfing that has rejection, right? Price rejected and then give an engulfing. So almost often, price is going to create a reaction on engulfings like this. Engulfings have rejection with a decent move to the upside. Okay. In fact, I think the same candle broke this, so that tells us that, oh, okay, this guy is going to give a reaction. It does not necessarily mean this guy is going to come, tap, and then go to the upside. No. It just means that, oh, okay, this is strong enough to hold price for the moment. Till price gets to its desired destination. And another thing is if price should break this, you would see that this creates a true breakout structure because it gives like an MSU pattern. Okay. So let's see, so price comes, taps that level, and then some sort of reaction. So again, into this level, you want to pick a trade. How would you have thought about it? Is easy in hindsight, because in hindsight I could have said, I could literally just say, oh, this is a breakout, the price is coming back, this is an engulfing, so we can pick the buy from this engulfing. What will be our target? Well, we can simply target this HNS level, okay, based on hindsight. Okay, so we can just go with that. So again, we had crazy move. I remember I was in this buy. It was a very crazy buy. I was in that initial buy to the upside, and the reason was because of this MSU that formed. Um, yeah, so again, off of this M15, you can see there's two-time breakouts happens over and over again. Show you first one, and then you have this, and then you have first takes the high, takes the low, right? True breakout structure. Okay. On this retracement, again, we had an inducement into this level. So on the M5, there was something classical. I think this was exactly where I picked the buy, right? Somewhere around here. So the descent buy was pretty short, and this was my targets. I think price reversed before getting to the target, so this was my target. So at the time, again, price reversed. But obviously I was already out. Okay, so price takes that diligent turn. What else do we have? You can pull out the trend line for this rejection because it's a pretty decent rejection, and it gets this sort of decent trend line from here, where it stops and then starts to reject. So I don't want to draw too many trend lines, so this chart will not be so clumsy. Okay, so let me delete this also. So again, we still have this level untapped. So this guy has fulfilled its work. So there's proper mitigation already. Price has achieved more than 1%. So if price should take this guy out, price would again likely take this guy out, just like we used to say. So again, if you check the H1, this candle finished as a bearish candle. So let me show you. Finished as a bearish candle. You can see the price came back to the classical scenario, this candle. So again, this is a double EG setup on the H1, bearish engulfing. In fact, this is an EFG, this theory, EFG. It's another bearish engulfing. So nothing is going to, or nothing should stop me from taking a sell from this classical scenario. I just have to look for more reasons to be able to pick that sell. So again, what do I see on M15? Just this exact same thing. Two-time breakout, first break. There's the second break. Okay, you can see first break, second break. So what happens next? Price comes back to this interesting level for for interesting reasons. I think there is also a trend line confluence. I've been seeing trend line. So this is also a trend line confluence. So you want to watch after you enter into above the trend line, and then watch for the rejection. So the rejection confirms that price would want to use that zone. You can see price starts to drop and then drops into our final zone, which is this level. I remember that this level was refined from the H4, and again, this is the last low in this scenario, the last low before this main low. So price stops. For all it takes, this should actually be a direct entry because in the grand scheme of things, price has taken the high, price has taken the low, and that's exactly what happens in a bullish structure. In a bullish structure, price takes the high, and then price creates new high rather and reduces the low. So what we expect here, if you want to be super sure, you can wait for a breakout on this level in order to pick the buy. So again, now you get your breakout. So if price comes back, lucky enough, you can pick the buy. Nothing yet. So you can see price just keeps flying actually. But there's something interesting about this, what happened here. It's just the same thing I explained in the scenario. You see, price, we're expecting price to sell from here, right? So rather than selling, just add a little reaction and then we broke. So it means that this zone can be a good zone for continuation. So if price comes, if there's a reason to buy, you can buy. But if we break this, it means that this same zone becomes our zone for sales. And that's why we're expecting a sell off of this line. And the same thing happened here. So off of this engulfing, we have reasons to believe that price can decide to sell. But obviously, we are coming from an intraday directive that is very, very bullish. So nothing can stop a bullish gold market. So this guy is, you can say it's taking liquidity, broken structure, engulfing, in fact, double engulfing in that level, can entry. But what do we see? Price broke and return to that. So we have engulfing fail, engulfing setup. So again, this becomes, I have this engulfing marked. So this little engulfing, I'm going to refine on M5 to get a proper entry or a more good entry. So the engulfing I have on the M5 is here, this one. Oh, sorry, come here. So the engulfing candle. See, that's pretty refined. Okay. And then, so I can decently take an entry from this level. Why? Takes the high, takes the low, EFG, right? So we're coming from an EFG narrative. So if I take it by here, this would be my decent target. And it was about 40 pips because I was also in that trade. Okay, so back to this. So at the same time, we want to ask ourselves because, like I say, it's always very important that when you're trading, you want to occasionally, after every H4 candle, you want to check the H4 chart. As you can see on this H4, this is an HNS, and at the same time, within that HNS, you have this angle, this guy, PE engulfing. So again, we want to mark and refine our engulfing. So within this engulfing, you can see this is the HNS we got marked. This is our H1 engulfing. So we still have this HNS marked. Okay. And then another thing we'll be looking forward to see is if price can use we have two trend lines right there. Okay. So price can come and then use any of this trend line. So on M15, again, I want to try and see if there can be more refinements. This is the H4 HNS. So on M15, first I'll take the high, probably take the low, and come to this side and blast off. Or we'll see like for price to actually get to this zone if price wants to get to that. So takes the high now. So my buy is I'm off of the buy. And again, lest I forget to mention, this is also an hidden engulfing. So price is not going to do something without telling you, oh, this is what I want to do. The market is always giving us hints, and the hints are always in the levels. The hints are in the levels. So off of this one is an hidden engulfing, and this is also an engulfing. All of M5, all sorry, all on M15. As you can see, this is an hidden engulfing. As you can see, there's an engulfing reaction here, and if we eventually close this way, that will be a breakout. Okay, you see, broke out. What happened? Price traced into that breakout. Let's see, let's refine that entry and try the sell entry. Okay, so price traced into this sell engulfing. So if you enter here, your stop has to be above this level, and then where will be your targets? The H4 HNS, right? That'll be your most decent target. Okay, so price always tells that story, always repeats itself, always tells us what it wants to do. And as you can see, the M15 classic scenario due on H1 is M15 hidden engulfing due on H1 is a classic scenario. So price is always there, giving us all of the hints. So right now we have double breakouts on H1, first break, second break. We are coming from an H4 engulfing with H1 double breakouts. There is no more reason to be bullish. Okay, so I can be super bullish. I'm very aggressive and I really want to get this trade. I can enter here, my stop below here, but this is too wide of a trade for me. This is like 86 pips. So if I'm not aggressive, I'll just wait. Okay, the price went up and then came down. Now when it came down, what did it do? Price created a classic scenario. Okay. But again, I need to know what happened. Why did price go up? Why did it come down? So I go to the M15, and like you would expect on M15, here is MSU. Okay, so this is price takes the high, takes the low. This is the true breakout structure, right? So price is coming back and came back into this M15 engulfing, and as you can see, in this M15 engulfing, I just drew this H1 this H1 classic SNR. So from this H1 classic SNR, we can expect price to tap. So we have a refined entry now based on our MSU and true breakout structure. And expect price to tap. And for even this tap, you can find trend line confluence. Let me delete this one. A trend line confluence that you can mark to actually get precise entry. Okay, so for example, when you're asking what trend line, you can see this trend line. Not the best actually. So let me look for another one. Let's see. Maybe I'll get to M15. Okay. So we have this. Yeah, I'm still trying to look for the trend line. Okay, maybe just something like this. So let's wait for the trend line to get that. Okay. Let's see. So okay, so again, yeah. So that was a decent rejection, right? And the same thing with like every other thing. Trend lines also have NTF, right? You can go to, for example, on M5, there is this H1 divergence. You can see H1 trend line back into that level, and then the buy started. Okay, so far so good. We've scarcely gone to M1, but you know, um, as in the live market, you might not be as patient. So M1 will always give you our entry models, price behavior, price delivery, and all of those things. So classical TP would be that high if you are going to pick from this level. And I was in this trade. I remember I posted this trade. This was one of the first trades I posted in the past week. Okay, so price came and then target hits. So we had this high taken. And so the next question is, are we still in this bullish scenario? Because we just had a good high taken, a high inside this weekly defined level. So again, like I say, anytime an H4 level forms, don't hesitate to go back to the H4. So as you can see, currently on the H4, there's a breakout. So there's H4 breakout, there's breakouts, body breakouts with breakouts. And in the grand scheme of things, it's also a two-time breakout on the H4. You see, first breakout and then second breakout, or in fact, three breakouts once. So we are pretty sure now, pretty solid now, that price is definitely bullish. So I can mark this engulfing buy. The price decides to come back. But classically, I want to mark this breakout SNR because H4 breakout SNR are always very, very strong. The next thing I want to do, so from the H4 breakout SNR, you can see there's an H1 gap level. So that's already telling me something. So if I refine the H1 gap level, or if I mark the H1 gap level into something like this, and then 15, I want to see the story. What's price trying to tell me? Okay, so on M15, nothing much. If I refine the H4 engulfing, this is what chart gets. So on M15, this is our level. So it just means that this guy, where we used to sell, gave a reaction price broke. So if I get anything, I can definitely pick buys from this rejection here. You can pick a buy from here, just off H4 engulfing, or H4 breakout and H1 gap level. So that will be the targets, as it were. They're also what's it called? They're also what's it called again? Trend line entry. Yeah, there's a trend line. You can see trend line. This would be first tab, second tab. This will be your third tab. All of this tab in between, just forget about it. All right, so if we go down, let's see H1 actually. See H1. Okay, so let's play from H1. Listen, again, breakout. And the breakout, which is super clear. So just price repeating the same thing over and over again. We've not done anything different. So I'm going to mark the same golfing. So after the daily, so on the daily is an H4 engulfing, as you can on H4, sorry, an H4 engulfing. And in fact, if I want to be cunning, this is a 36 trend line rather. So I can just mark that for fun. But most times I like to mark my trend line when price is closer to the market than when it's far from it. So for example, I prefer to mark because price is just there. Yeah, but I don't like marking trend line down and leave it for days. And I prefer that when price is active or closer to my level, I'm able to identify probable trend lines I can trade from. So again on the M15, like we do, like we say, like we again two-time breakout, first break, second break. Okay. So nothing is stopping me from picking buys if we get to this zone, or even from this level. Nothing is stopping from taking a buy here because this is also an interesting imbalance. So yeah, you can actually pick a decent buy. So it's still the same thing. Nothing has changed in what we are doing. Nothing has changed. We are picking the exact same trades, the exact same setups, different trend lines, right? Different trend lines. So price just keeps going high, high, and high. Okay, so this is the weekly high that we marked from the onset. So again, let's go to the H1. Okay, so as you can see, this reaction came off this H1 gap. You can see this is what price likes to do. Okay, came off that H1 gap. Really interesting level. I want to be cunning. I need to be cunning. Can pick out this trend line of unlucky. Price did not tap there. Well, actually, price eventually tapped at this point. So this, then price tapped. And then we start, sorry, and then we start to see crazy price. So the price in, so we have this engulfing field, that engulfing form. So it's an EFG with a trend line continuation from here. And how about this one? Just basic MSU, price takes the high, price comes back to take the low into this efficient pricing. Okay, right. Price likes to become efficient. All right, so again, rinse and repeat, nothing has changed so far. So this is the high, this is the low. So let's see if price will take the low again. I think price likes to do. Price takes the high. The low is usually not so far. You see, price takes the low, distinct rejection off of this level. And at the same time, you can also look for trendline confluence. So as you can see, if after this reaction, I want to pick this trade, I can try to pick from here. So let's see, so find this entry here. And I think this was one of the trades I called. I sent to the mentorship page. I sent this this entry. It's still the same thing, just two-time breakouts. Okay, so this is first breakout here, second breakout. The price came, continuation. We're supposed to sell from here, but we broke, right? Just the same example I gave. So this becomes our buy continuation zone, and that's why I called this buy on the page, and this was the target. So price came, and then for the re-entry, it was just the same thing. Nothing changes, just reactions and reactions and reactions. So what we have here is an hidden engulfing for the continuation. So hidden engulfing plus N5 emissions. Let me show you. Then price takes the high and then takes the low internally. So we have takes the high, takes the low, last low before the main low infused, and then the buy is up. So also could easily have gotten a trend line continuation for that trade. So could easily have gotten a trend line continuation for the trade, but I don't want to be too cocky. So it's just the same thing repeating over and over again. So prices or the market is such that whatever it's going to do, it's going to tell us at what time. As you can see now, we have this high taken, right? What do you expect in a bullish market? Probably the price is going to come back to take the low. Sorry. So go to H1. So what do we see here? Let's go to H4. It's been a long time to H4. Okay, decent. As you can see, H4 is an H4 engulfing. In fact, see how wonderful this thing is. So H4 engulfing, H4 classic SNR. We've gone to H1. Oh, okay, on H1, price has not tapped it. But if you have this level marked on H4, what will be expecting? This has taken the high, comes take back the low. So this will be your liquidity level. In fact, this can be a direct entry trade just based on what you have on the H4 and the continuation. So your targets will be the next time. And also, there's trend line conference. I don't have to even say that. Okay, so over and over again, someone is asking me where's the trend line conference. Okay, this is your trend line conference. If you need a kiss, let me look for a kiss for you. Okay, see that? All right, so again, price taps, and then this will be the next time will be your target. What else? How will price continue the market from this breakout, from this gap, over and over again? Okay, that's usually what happens. So that's why if you're an intraday trader, your H4 and your H1 is your most important. Because I tell many people H4 because H4 with H4 you will be more focused at work or more close to anything you're doing. But if you have the time to sit down with the charts, I think you should focus on H4 and H1 because those two, they are like friends. They must correlate. Okay. Like I said in the last time, H1 cannot stand alone, right? H1 needs H4. Okay. However, H4 can stand alone. Okay. But H1 needs H4. Needs H4 direction, needs H4 logic to be able to actually play out. Okay. So yeah, I'll take any questions that you guys have now.